Hello, welcome back to this week's market update. Today is Monday, July 28th, 2025, and we will jump right in. It was a positive week for equity markets with both the S&P 500 and the Nasdaq Composite closing at new record highs. As of Friday, July 25th, the S&P 500 led major indexes with a 1.5% gain last week, followed by the Dow Jones Industrial Average up just shy of 1.3%, and the Nasdaq Composite up about 1% as of close on Friday last week. Looking at last week's economic data here, you can see we got the LEI, the leading economic index from the Conference Board. It showed that the LEI fell 0.3% in the month of June, so a pretty slight decline, but it was the third consecutive month that it was flashing this recessionary signal, which you can see it's been in that signal off and on in the last 2 or 3 years here. We have yet to have an actual recession, but it is moving back into this recessionary signal, so something we just want to be aware of. And then looking at the drivers behind that move, you can see the S&P 500 was a positive contributor, making the economy appear stronger, while on the other hand, consumer expectations and the new orders index were both putting a pretty heavy drag on the LEI in June. We also got the existing home sales data for the month of June here. The median sales price hit a new record high at 435,300. This was up just 2% from a year ago, but did mark a record high. And this comes as volumes have been quite subdued. You can see they're down 2.7% from May, flat from a year ago. And the number of homes for sale is up 15.9% from a year ago, up to 1.53 million, which amounted to 4.7 months of supply. Overall, we can continue to see the impact of high mortgage rates on the housing market, with many homeowners opting to stay where they are rather than move. As you can see, prices are at record highs and mortgage rates remain relatively high. New home sales data for the month of June also came out last week, with the number of new homes sold coming to 627,000, up 0.6% from May, but down 6% from a year ago. Inventory levels continued to climb, with 511 new homes available for sale, up 8.5% from June of last year. And then last but not least, the median sales price, unlike the existing home sales data, was actually down 2.9% from a year ago to 401,800. So you can see since a pop in new home sales in 2020, 2021, when mortgage rates were especially low, they have been trending lower, and you can see it's even trending lower in the last few months. So seeing the very clear effects of high mortgage rates. As of Friday last week, over one-third of the S&P 500 companies have reported second quarter results, with more than 80% exceeding earnings expectations. The expected growth rate now stands at 6.4% year-over-year EPS growth, a big jump from last month there. You can see an improvement from 4.9% to 6.4%. And within this, we can see some sectors have moved quite a bit. Utilities expected to post 5.1% earnings growth, now expected to post almost negative 2% earnings growth. On the contrary, we saw financials expected to post about 2.3% growth, now expected to post 10% growth from a year ago. So definitely some significant deviations within sectors, but overall, the earnings picture has been improving as more companies report earnings. In the week ahead, we have several Magnificent Seven companies reporting, including Microsoft, Apple, and Amazon. So these figures will definitely be changing quite a bit in the coming week, but just important to take a look at where we are in the earnings reporting cycle. Last but not least, we do have a Federal Reserve meeting in this upcoming week, and markets are pricing in just a 2.6% chance of a smaller 25 basis point rate cut and a 97.4% chance that rates are unchanged. So pretty likely that we will not be getting a rate cut this week. However, when we look ahead to September, markets are currently pricing in just shy of a 64% chance of a rate cut by September and an 82% chance of at least one rate cut by October. So, although we're not expecting a rate cut in this upcoming meeting, the sentiment and the market conditions described by the Fed will be very important for understanding what the expectations are for future meetings. So that concludes this week's market update. We really appreciate you tuning in, and we look forward to seeing you again very soon. The information you have heard is the view of Synergy Asset Management as of the date of publication. These views and opinions are subject to change without notice. Investors should not act on any recommendation, express or implied, or information in this material without obtaining specific advice from their financial advisors and should not rely on information herein as the primary basis for their investment decisions. Information contained herein is based on data obtained from publicly recognized sources and is believed to be reliable and is not expected to be updated after initial publication. This information has not been independently verified, and Synergy makes no representations or warranties as to its accuracy. The material has been prepared solely for informational, educational, and market commentary purposes and is not a solicitation of advisory services or an offer to buy or sell any security or to participate in any trading strategy.